Today could be a huge day for markets. In just 25 minutes, we are going to get the inside, behind closed doors, information and discussions by the FOMC, by the Open Market Committee. We're going to get insights as to their decisions coming up, their decision in July's meeting. It was the 5th consecutive meeting where the Fed held interest rates steady. Amid a backdrop of moderating U.S. economic growth, a resilient but slowing labor market. However, we have had job revisions since then to the downside, which may have mixed everything up. We have inflationary pressures that are potentially exacerbated by recent tariffs under the president. The Fed does face external pressures, especially those from Trump. Trump recently calling for, I believe, a criminal indictment and for one of the Fed members to step down this week. That's actually brand new news. Basically, the Fed is navigating uncertainties while looking to ease housing costs and refinancing, which are slowly beginning to push prices up. Internally, the meeting highlighted growth divisions with the first multiple governor dissent since 1993. Actually, I learned that today. Reflecting debates over whether to ease the policy sooner amid softening data and wait for clear tariff impacts. We've been talking about on this channel September being the interest rate cut month. That is the next FOMC. There is not one this month. And it somehow seems, especially with this with the job revisions we've seen to the downside for this year, that September is likely to be the time. During the FOMC, they talked specifically about GDP growth, the labor market remaining robust, and inflation above the 2% target, and maybe not cooling, maybe slowly picking up very slowly picking up a burn. So thank you for joining us. We're going to get into that. We're going to jump into the charts. Crypto with some spooky moves over the last few days. Let's go, boys. I'm messing with too many tabs. There we go. I got the chat up. What else I got? I got it all. If you could, make sure, smash that like button, the subscribe button, get it hyped up. It's going to be an interesting day, I have a feeling. While these notes are unlikely to change the world, to change everything about the markets, I think they are going to give us some insight. Unfortunately, the job revisions, which I think is going to be like the biggest factor coming up in September, isn't going to be included on these. That was more recent than the FOMC, and these minutes are the minutes they use going into it, so they haven't been updated either. But we could get some interesting insights. We could get some good data. They never have the data that day, but somehow they have the data later. I don't know. Nobody knows how it works. What's up, Salim? How you doing, bro? Who's all here today in the chat? I see ICP, Seth, the coolest shades in the game. Thank you, sir. Abir, bullish or bearish? Well, it's not the FOMC. It's simply an update. An update from the FOMC. We can get a little more context here. It's not actually the meeting. The next meeting going to be in September with, like, at this point, a 99% interest rate cut probability. So the question into September may not be, will there be an interest rate cut? It might be, how big of a cut are we going to get? Is it going to be 25? Is it going to be 50? Is it going to be bigger? Realistically, it's probably going to be 25. Realistically. You never know, though. You never know, fam. Things can get, they can change at a moment's notice. Powell is master. He's only got a few more meetings coming up. So let's look at some charts here. Can I get a chirpow? Can I get a chirpow in chat? Should have played that song. Should have played our chirpow song. Let's talk about the markets quick. Last 2 days, crypto has been selling off. No surprise to anyone. I haven't seen the timeline this spooked in 2-3 months. It's been a bit, especially for how high up we are. Total crypto market cap highlighting exactly what is going on here. Last 2 days, we sold off after putting in a new all-time high in August. I really like total for this. Back testing again, $3.73 trillion. This was December. This was last year's all-time high for market cap. Back testing that almost perfectly here today, finding buyers, finding support, and seeing a pretty convincing bounce so far. Turning it over to, let's go to Ethereum. Let's look at Ethereum. Ethereum, right? Ethereum sold off pretty spookily, I'm not going to lie, just to 4,100 last night as the daily was closing. I was looking at this going, man, I should have told you guys taking profit at the all-time high is the play. And I didn't close my ETH trade, and I was sitting there literally as the minutes counted over to 8 o'clock to the next day, watching the sell off, and I was like, should I close my long? And then I said, you know what, Tom, no. Practice what you preach, follow your own advice. If I go to close this right now in the moment, it almost certainly is going to be the bottom. So I did not close it. Thank goodness. We've bounced $200 since then, but here's the real kicker. It's not so much the $200 bounce. It is the bullish engulfing. We had 2 days of selling off on Ethereum. We dropped pretty significantly, 4,400 down to 4,000, about 10% drop. That momentum, finally finding bidders, finally finding buyers, hitting support, hitting previous resistance, and looking to make that move back up. I like this. I like this bounce. I think the bottom is in. The bottom's been in. It's more bottom. I like the level at which it's bouncing. This is also driving this home for me. 4,100. Basically, every single high we've seen rejected from over the last year and a half, 2 years, coming in, finding support, bouncing. We're going to watch Ethereum, in my opinion, battle it out on the week at 4,475 again. I think we'll do that into Friday, provided we don't send to Valhalla today. I think that we will see a retest of 4,475, retest that weekly, and we'll see what happens there. This week can close above. I think things look fine. Even if we do close a little below, this candle can start to look very strong with a big old bottom wick that we're seeing formed right here, right now. And Ethereum, I think, has more all-time highs coming. I don't think it's done quite yet. A lot of people are asking, is the cycle over? Man, it will be eventually, won't it? I don't think people will be asking if the cycle is over, though, at the time. We'll get into that in a minute. We still have 19 minutes for the minutes. God, this terminology. The week weekly, the FOMC minutes and 19 minutes. We still have 19 minutes until we have our update from the FOMC. So stay tuned. Keep hitting the like button, subscribing, tapping the screen. We're just going through some little charts here quickly, get it a little context for the bounce that we're seeing right now. And then I'm going to turn it over to the chat and see what you guys are looking at. Total crypto market cap, though, we're just looking at Ethereum, strong bounce. Total, not quite there when compared to Ethereum. This is showing me that Ethereum is showing relative strength versus the rest of the crypto market. It is bouncing harder. It is bouncing faster. I think that shows some bullish sentiment. I think that's a good argument for it being strong and continuing the uptrend. But I want to see total retake what it lost yesterday. And again, just like Ethereum, make it back to its weekly open at just under 4 trillion. That's going to be a very good indicator if we can see that retaken this week. Bitcoin, we'll jump over to Bitcoin. We were talking on Monday about the monthly pivot and how things get ugly under this level. And it did. It honestly did. I thought on Monday we were going to close up. We were going to retake our ascending trend here that we've been following since April, and that we were going to continue back to our weekly resistance 19.5. Unfortunately, we closed below the trend line the next day, rejecting again, and it's sending us back down to August's or monthly lows here at 12K. This has held on. The bounce is not as convincing as Ethereum at the moment. We are teetering near that 12K level. It's not what you want to see. It's not what I wanted to see. All hope is not lost, but it is not what I wanted to see here for August. Especially considering interest rate cuts in September. I don't know, man. I feel like we're going to see some selling in September. I was really hoping we were going to close August green. Flipping it over to the week, we do see our weekly support we talked about on Monday, our trading range here. I think we even talked about that last week, between 19.5 and 14.3. 14.3 is going to be a solid place to look to close above this week. I want to see higher, but I'll take it above 14.2, 14.3 here. It really just remains range bound then. Be looking for that 19.4 tap one more time. I want to see this higher. I want to see it up. XRP, kind of the same deal. Rocking us like a hurricane, taking out support, moving back up, looking more like Bitcoin at this point. I think that did fill. I think I placed that and it did fill. I'll have to go look if we took that long. Real quick, Solana, what are you doing? What are you doing? Solana in the same boat as Ethereum, retaking all of the losses from yesterday. Actually, a little bit more bullishly here. Solana may be gaining ground against its other pairs, and we do see that happening right here on the day. Solana BTC back up to weekly highs. Actually showing some strong bounce behavior here. Maybe Solana is going to be the next to go. I bet you guys would like that. The next runner. Did hit 209. Yeah, just looking for a higher low, and that looks great. That does look great. Dominance still suggesting. Still looking at alt season, though it doesn't really feel like alt season, does it? It really doesn't feel like any season. It feels like we're still in a bear market. Everything's boring. No one's really interested in it, up or down. There we go. Ethereum's still pushing. Let's go. Ethereum looking very strong today. Yeah, it's like a bear market. No hype-driven retail, no excitement. Price goes down, price goes up. Nobody really cares. In the previous runs, it has been like, if it pumps, people tune in. Or maybe they're not tuning in, but if it dumps, people tune in. Now it just doesn't really matter. I think a lot of people at this point are just fed up with price action. They're not even really paying attention to the charts the same way. I get it. That's fine. It's okay. It's healthy to take breaks. I'm there with you. If I didn't stream this stuff all the time, full time, I might take a little break for the summer too, but I don't get that luxury. 4 hour on Ethereum actually looking very solid. Ethereum might be putting in a V-shaped bottom. Strong recovery here after slicing down to support. Aiming for 4,400. DCA and retire for life. That's right, brother. That is right. Okay, let me pull up the chat. I know the chat's going behind me. It's flying. So my browser doesn't crash. There we go. Clear that. Let's see, boys. Who's here? You took the summer off, Brian? Byron, you're lucky, man. You're lucky man. But Jordan says pump. YB said he has a dream that Ethereum went to 1,000 yesterday. I don't think that's going home. I think if Ethereum goes to 1,000, I don't think it's going home, bro. I think it's going to the afterlife. It goes to 1,000. 1,000? Ooh, I hope not. Let's see. Bear market low on Ethereum was 900 for 2022. If it trades to 1,000, Ethereum's pretty cooked. Like, it's pretty cooked. I would lose a lot of confidence in Ethereum if it traded to 1,000. It is still a higher low versus, the 900, but man, that would be cooked. I hope not. YB, I hope that was not a dream. I hope that was a nightmare. You bought that? What's up? What's up, Zestly? Please, no, I agree. Should have added more to your soul bag this morning. Didn't expect it to move up before the minutes. Yeah, I think that markets are sensing something. I think they're sensing something. Look at Ethereum. Ethereum against Bitcoin. We're really seeing the value of these BTC pairs. This is something that most people don't discuss or really ever learn about. This is such a fundamental, important way to understand the crypto market. Ethereum bounced a little bit harder. We saw that looking through the USD pairs. I pointed that out before seeing this, but you couldn't tell in the same way. You couldn't really see it the same way that FBTC shows you it. Ethereum has at this point traded down against Bitcoin this week, but is now back to its highs. All of these USD pairs are down. Ethereum back to its highs this week. against Bitcoin, this is showing lots of strength. The statement that Ethereum is bouncing sooner and harder right now was spot on, and it's driven home by this chart. I think the trade remains the same. I think the trade on Ethereum, 0.05 or just before against BTC is looking very spicy. I would love to see this opportunity. I would love to see this tight pullback from the fib retracement back to previous resistance. Test the support and bounce, but I'm not going to hold my breath for that. We do see some pretty solid, efficient market price action to the left in this range before falling. So to see it do that again wouldn't be crazy, but with the way that this has been bouncing, the reaction to its hit of major support, I don't think we're going to get clean pullbacks. That actually kind of reminds me of someone in the chat. Maybe was it last week, probably Wednesday, Thursday, Friday of last week up here on Ethereum. They said, Tom, is 4,500 a good entry? 4,500 a good entry. And I sat there and I kind of ranted about it for a little bit. And my main idea was, I don't think so. I don't think we're going to get these clean kind of soft pullbacks. I think we're either going to get a very minor pullback, which is not what played out here, or we get a stronger pullback that basically breaks through resistance, right? Breaks a little market structure. I think I was actually showing something like this happening potentially. So I wasn't spot on either, but the concept was right. We broke a little market structure. We hit a lower low. When we're uptrending like this, you just barely ever get like clean moves. You never really see these back tests of support, you know, just like a super obvious entry. When the market is very bullish, it will make entries very scarce. Markets will make it very difficult to enter a long position while markets are bullish, if that makes sense. It's kind of counterintuitive. When it's going up, it doesn't allow you back in. The same is true when markets are moving down. Typically, they don't allow you any solid or kind of obvious easy short entries. They're going to make you short the bottom of red candles. The same is going to be true in bullish markets. They're going to make you long the top of green candles. They're really just keeping you out of the winning side, right? So more liquidity for them. Total, I think that's all I'm really talking about. That's all I'm really talking about. We got 9 minutes till the FOMC, or till the minutes are out. Dude, this terminology, 9 minutes until the FOMC minutes. What a nightmare. Why can't we just have words? Why do they have to call these minutes? Like, what a terrible thing. Why minutes? Who came up with that? Oh, I want a refund. That's bullshit. Yeah, it's some malarkey. All right. Total, double bottom there. Moving higher. Interesting. Okay, for the next 8 minutes, I'm just going to read the chat. Done getting zoned into what I was doing. What's the effect for 𝐒𝐲/USD? For gold? For FOMC? What do you think, gold up or down in this news? You know, gold's not a bad chart to pull up for right now. Not a bad chart to pull up. Haven't really been looking at gold as much. Hasn't been blasting all-time highs. But it has been painting the craziest structure ever. Gold completely sideways. Interesting, gold kind of behaving like Bitcoin now. At least Bitcoin in this cycle. Or maybe we could say Bitcoin is behaving more like gold in this cycle. I'm not sure which one's really true. But gold, since April, has traded sideways. Hit all-time highs. Hasn't really given up those gains. It did for gold trade down a little bit here, 10, 15, 20%. But what are we at this point? How many days? 126 days sideways. Gold not really reacting to any of this. That being said, it has blasted, man. You look back to 2016, it was at 1,000. I know. A decade later, it's up 225%. Peter Schiff is a genius, clearly. 10 years, 200%. Yeah, you've lost to inflation. Anyway, this looks bullish as hell, and I think gold is going to continue to break out I don't think we're going to see a breakout today specifically on these notes, or on these minutes. Maybe next month at the FOMC when we get our first interest rate cut, maybe we'll see gold react strongly. Maybe we'll see it head towards that 3,500. Start making grounds to 4,000, something like that. Yeah, 4,000. Silver, baby. Is silver moving? And silver was moving. I was like, I'm going to read the chat. He said, as I opened up all the charts. Silver moving sideways. Silver has had a little bit more spice, I'd say, than gold. Gold moved sideways since silver hit its low. It's almost as if gold got put on pause while silver began rallying. It's an interesting way to look at it. Bad Baptist, you're long �PAXG, baby. You're long gold. You're long gold. How is that? How is that �PAXG? How is that �PAXG looking over there? So you're long �PAXG. �PAXG USD. That's okay. Because if it was �PAXG BTC, I'd probably be short. That means you're just long gold USD. That's okay. I mean, I don't think it's bad. I think you might wait longer than you want on that trade. Maybe not though. This could explode at any minute. This is pretty bonkers. Oh my god, messages. I think this is bonkers. I think this is definitely going to break to the upside. I don't think gold is going to break down anytime soon, especially with interest rate cuts. Like, why would gold go down? Interest rate cuts, I think you would argue, are pretty much just bullish for gold. More inflation, yes, more inflation. Long-term trade, hell yeah. You're long on Bitcoin 112.5. You long the exact bottom? Hell yeah, bro. What a G. What a G. This is the exact bottom. Long Pepe, when JP. What happens if FOMC is bad for dollar? How's it affect Bitcoin? Ahmed, I would say that interest rate cuts are bad for the dollar. Bad for the dollar strength. But is dollar strength, bad for Bitcoin? I don't think I'd make that argument. I think when the dollar is stronger, that's more downside pressure on Bitcoin's value in USD. And we can see that, we can see that in these other pairs like Bitcoin Euro. Euro has been performing much better than the dollar over the last, let's say 6-9 months, whatever. And that is why we haven't seen it break all-time high. It still didn't. We actually are now seeing a little structure break of Bitcoin Euro after almost testing all-time high. I don't love this. We did look at this last week, and I think I said I was pretty confident this wouldn't happen. That just shows you there's no such thing as knowing. We just go with our best guesses, our best, most informed answers. There's no such thing as knowing when it comes to trading. I don't love this because it can start to look like a diamond pattern. And after a move to the upside, a diamond pattern, in my experience, has very commonly led to reversal. That's why I don't want to see that happen. But we're seeing strength in the euro. And strength in the euro has prevented a new all-time high for Bitcoin in this pair. While the USD has broken it, the euro has not. And GBP is in that same boat, so same as the Swiss franc. GBP did break its all-time high, but by like fractions, like very little versus July, and just sold back off similarly. Something that is kind of spicy here is these strong currencies like the pound and the euro breaking their market structure, meaning just putting in a lower low here, breaking below August's low. And then you look at the dollar, and the dollar has held that low, right? Has held that low. It's pretty spicy. It's pretty spicy stuff. Pay attention. There's some crazy stuff going on in markets. CME, no gaps, open on the 50. All right, we got 1 minute for the minutes. Dude, I hate this. In 60 seconds, we'll have our FOMC minutes. Let's go. How long till the meeting starts? I should have put a note at the top. The meeting is in September. The meeting is in September, boys. I hate to say it. But the FOMC minutes will be published here live, and we're going to break them down for you. We're going to break them down together. Should be like, actually, 2 o'clock should be right now. July, released August 20th. That is today. That's today. Open Market Committee. Hype it up. It's about to get... Well, it's about to get maybe a little boring. Hype it up because it's about to get a little boring. Smash the like, subscribe, put a little hype in the chat. Get a little 𝐒𝐿 in the chat. What's up, Veslin, Jafar, Belinda, Kansas, Smart Funds, Business Solutions, Kit, Doug, My Comedy, Angel Tech, Ben, Atif. Who else subscribed? If you're out there and you haven't subscribed to our channel, join us. We are the inventors of the FOMC live stream. We invented it. We were some of the original OG crypto trading channels on YouTube. Have you guys noticed that every crypto influencer is now a chart trader? Isn't that interesting? Every single one. Every single one. We've been doing this 6.5-ish years. When I started, there was like one of the reasons I did trading is there was just very few people who were applying traditional technical analysis to crypto, and I was one of the first. That's right. Let's go. Hype for boring. So smash the likes, join us, subscribe, become part of our community. Let's get into some of this. We're gonna have AI break it down because this would be very tedious. All 20 pages of this would be very dry. Very, very dry to read. So thinks hard, quick responses. Chooses best mode. I guess we will allow Grok to pick its own mode. I don't know. Developments in fund markets. So we're just going to say summarize the recent FOMC minutes published today. I know I can't give this too much or it's not going to do it. Let's start with this. We will start with the developments in financial markets and open market committee operations. Oh gosh, it gets the blood boiling with excitement. Let's go. Let's go. It's going to be so crazy. No, it's not. Fartcoin analysis. The 𝐒𝐿 song? Yeah, that's not a bad idea. Let's get a little 𝐒𝐿 in our life. I need a little sound, a little music. I don't like just speaking into the sound void because these are noise canceling. It's just like I'm speaking into a void. I don't hear anything around me. Let's put on a little. Watch your speakers here. Here we go. Hold up. Grok's thinking.
Navigating through the markets, knowing what to do. Federal reserves in control, making moves. Keeping that money flowing so the economy can groove. Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Oh yeah. We're queuing it up.
Money machine going bird. Chairman Powell, he ain't playing this blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, chairman, he's the captain of the crew. Navigating through the markets, knowing what to do.
All right, Grokky has some thoughts for us. He's got some thoughts for us. I'm gonna turn this down. Here we are. What is up, my friend Andrew, William, Lady Tindo, ARD, what's up, CryptX, Jacob, longest. 𝐂𝐐𝐴, my guy, what's up? All right, so we are breaking down the just published FOMC minutes live in front of you. This is going to be the first analysis even out there on the web, coming in right now live. We're starting with developments in financial markets, and here's what we got. As of August 20th, that's today, the most recent FOMC committee... Oop, wrong paragraph here. Why did it do this? Grok, you just clowned me, bro. You clowned me live. It like didn't do it. Why didn't it do it? All right, I guess we gotta wait again. Son of a bitch. Why did it do that? It like said it was done, and then I went to go read it and it was gone. Casper crew in the house. What's up? What's up, Casper fans? I love Jason Casper. What a good dude. What a good guy. 10 out of 10 bro. 5-star man. One of us for sure. If you don't chart, you ain't smart. Dude, Grok, you're taking your time, bro. I could have done this myself. Could have done myself at this speed, dude. What's going on? Fart coin analysis. It's shitty. All right, here we go. Key context for our first segment here of the just published FOMC minutes. The behind closed doors thoughts, reasoning, context behind the FOMCs. Overall market stability, the expected path for the federal funds rate and longer-term treasury yields remained largely unchanged. This was pre-labor number changes, though. So this is likely to change going into September. Equity prices rose, credit spreads tightened, and the US dollar depreciated modestly. Markets reacted more mildly to trade policy news compared to earlier periods like April and May, suggesting adaptation and or reduced volatility. The Open Market Desk survey of market expectations showed unchanged median forecasts for real GDP growth and inflation, aligning with steady macroeconomic environments. Perceived risks from trade developments, like tariffs, contributed to slight increases in near-term inflation compensation measures, with longer-term measures rising less significantly. So, at this point, at least according to these notes, it seems the Fed is more interested or more concerned about maybe even just reactions to tariffs than tariffs themselves at the moment. They're not looking for that longer-term boil. They're just looking for the short term. Money market rates were stable overall, but repo rates edged higher due to end quarter pressures and increased treasury bill issuances following the July debt limit resolution and TGA rebuilding. The July debt limit resolution. Okay. This led to record SRF usage of over $11 billion on June 30th. Projections indicate on RRP, reverse repo, whatever, facility usage will drop to low levels soon, leading to sustained decline in reserves in the first since portfolio runoff began in June of 22. Staff will monitor reserve indicators closely, expecting temporary dips during high levels of demand periods. Yeah, I'm gonna turn. I can't have that looping while I'm trying to read. Jeez, I do love that song though. I used to listen to it on repeat when I first heard it. The committee unanimously ratified the desk's domestic transactions. No foreign currency interventions occurred. Nominal treasury yields a little changed. Dollar, not too much. The first section usually doesn't have much. Yeah, you usually have to get into like the third, I would say, third section to get the meat and potatoes. Yeah. A chirpow. Put them chats in the chirp. Put them in the chirpows. Do I have memberships? Oh, I have memberships to gift. Let me give away. I'm giving away 5. I'll give away the other 5 in a little bit. If you want to win the free membership, the free YouTube membership, all the golden emojis. Make sure you're liked the stream, you've subscribed to the channel, you've shared it, you've engaged, you've sent something in chat. Those things make it so you are more likely to win, says YouTube. When does the meeting start, Kai? The meeting's already started, brother. It's right here, right now. It's already started. It thought for 18 seconds on this one. This section it was very quick with. The next section will outline the staff's assessment of U.S. and global economic conditions based on data available at the meeting. It highlights a tepid U.S. expansion with solid labor markets, but stalled disinflation due to tariff pressures alongside a global slowdown influenced by fading U.S. import effects and trade uncertainties. Fair enough. Real GDP grew modestly in the first half. Advanced estimates showing expansion in Q2, following a Q1 decline. Real private domestic final purchases slowed in Q2, as investment growth decreased despite faster PCE. Net exports shifted from a significant drag in Q1 to a large positive contribution in Q2. Imports of goods and services fell sharply. Imports of goods and services fell sharply. That does not favor inflation chilling. Likely due to post-front loading effects from anticipated tariffs, while goods exported declined moderately and services exports rose. Wait, that's good though. Service export rose is good. Imports of goods and services fell sharply. Conditions remain strong and balanced in the labor market, dipped from 4.1 to 4.2. That's still full employment, still good numbers. Disinflation stalled. 12-month PCE inflation at 2.5% in June, core at 2.7, both similar to year-ago levels, but still above the 2% target. Indicators showed a Q2 slowdown as the temporary boost from U.S. import front-loading waned. Canada's economy contracted. Oh no, Canada. China's GDP grew moderately, driven by domestic spending. Inflation headline rates near targets in most economies, suppressed by past oil price drops and waning wage pressures from prior tightening. Core inflation somewhat elevated in select areas. The key takeaways: U.S. resilience with risks. The economy showed underlying momentum via PCE, but faced headwinds from tariffs, which halted disinflation and distorted trade flows. Labor markets provide stability, but cooling private payrolls and wage growth signal potential softening. You know, a lot of what I'm getting from this, and this could be just how Grok does this. You know, Grok might be focusing on this, but a lot of what I'm getting from it is that tariffs are like maybe the main talk in these notes. It's interesting. It is really citing them quite a bit. Like almost every section has something on it. Financial stability. Let's see, what's the next section? Over the immediate funding period. Where are we at? Okay, yep, good. Got to double check now because it wasn't doing it before. The staff's analysis of U.S. financial markets, credit connections, and systemic vulnerabilities during the intermeeting period. Market implied federal funds rate path over the next year and nominal treasury yields still largely unchanged. You know, they're going to keep saying this, but I think that come September, that's going to be very different, and probably already is very different in reality. With the job revisions, I think a lot of what they're saying here, where it's like long-term outlooks unchanged, that was before. I think with the revisions, that's probably going to change, which is an interesting conundrum because it was like the government was upset about the numbers being wrong, yet they want interest rate cuts, and that's probably how you get them. And it's like, I don't know. It's an interesting conundrum. Broad equity indexes rose, credit spreads tightened. We already know that. Foreign equity prices and longer-term yields increased modestly. Markets remained orderly with typical quarter-end dynamics. TJ balance rose from $313 billion to $5 billion. Post one big beautiful bill. Repo rate slightly elevated due to quarter end effects. Borrowing costs eased moderately but stayed high versus post-GFC averages. Corporate bond and leveraged loan yields dipped. Small businesses, mortgage, auto, and credit card rates remain stable at upper post-GFC ranges. Credit availability is generally accessible, especially via capital markets and non-banks for larger firms. Non-financial corporate bonds, leveraged loan issuance solid in June. Private credit available but slowed in May. Bank loans grew moderately, led by C&I. Small business lending subdued due to weak demand. Lending standards mostly unchanged across categories. Credit performance stable but weaker than pre-pandemic. Corporate leveraged loans default rose moderately below post-GFC medians. Now let's pull up Bitcoin. Oh no, Bitcoin. Oh no. Bitcoin rejecting a little bit there. Ethereum rejecting a little bit there. So here's the reality. The crypto market not loving these notes. But I would say hold your horses. Don't react, because it is almost certainly unrelated. It's almost certainly unrelated, guys. There's nothing in these notes so far that is a surprise by any means. And there's nothing in these notes that would, I would say, reduce how much impact the job revision numbers had this month going into the next FOMC. Meaning, like, all these things where it's saying things remain the same, blah, blah, blah. That was looking not for cuts. But that has almost certainly changed since then. So this, probably a shakeout. Likely just kind of more of the same of what we saw over the weekend. We see Ethereum reversed over the last 15 minutes. Same with Bitcoin. I'm going to guess that total, probably in the same boat. Of course it is in the same boat. Nothing to worry about yet. Funding risks moderate. MMFs run vulnerable prime-like assets, mid-historical ranges as percent GDP. Key takeaways: elevated valuations and leverage highlight potential fragilities, particularly in non-banks and private sectors, warranting close monitoring amid ongoing economic uncertainties. Policy implications: orderly conditions and easing costs align with data-dependent Fed approach, but vulnerabilities underscore caution. Sure. We still have probably what is likely to, the most likely to have a curveball in it is probably this section. I'm not so positive there will be a curveball in this section, but Chair Powell is speaking Friday. So FOMC isn't until September, but Powell is speaking at Jackson's Hole at 10 a.m. We're going to be live for that here. And I will say with very high confidence, incredibly high confidence at this point, that he will be forced to comment on changes, like the changes that we would have expected here going into September. He will, I think, almost certainly have to say something about the job revision numbers, how that changes their outlook, something, because it's just so important. And we follow Powell all the time, and we kind of have a good understanding of when he does comment and doesn't comment on things. And this would seem like one of the times where he is going to make some kind of comment. So that's Friday at 10 a.m. This last section here does have mix-ups at times. Let's see. Repeat. VIX declined just below the historical median. Gains attributed to positive trade news, easing tensions, stronger than expected activity. Moderate rises in foreign equities and yields on similar positive news. Broad dollar index stable. Positive trends. Improved sentiment. I would agree. And easing costs support resilience. But high rates constrain demand, especially for smaller, lower credit entities. Elevated valuations, leverage, funding. It's the exact same thing. Wow. Come on, come on. This does make sense though, because in the last meeting, it was nothing has changed. Everything is the same. But since the last meeting, or in the intra-meeting period, we have gotten some very big curveball, spicy news. And that is the job market is not robust in the way that the Fed at least has been calculating in. Remember, the Fed operates largely on equations of plugging numbers in, getting a number out, and you either get a good number or a bad number. It's not like, how do I feel today? Do I feel like this is good or bad? Like, that's not really the way they operate. And so the problem is when you operate on equations like that and you're looking for is good number or is bad number, well, when your numbers are wrong and you have to go back and plug in the right numbers, you're almost guaranteed to get a different outcome. So I think a lot of this kind of everything is remaining the same talk from the notes is reflecting the lack of having that data then. Slightly lower than June inflation, uncertainty and risks. These are the same. Outlook really over and over again. The near-term outlook is a slight rise in inflation. The longer-term outlook is not so much. Not so much. Expectations remain well anchored, but risks of unanchoring from prolonged high inflation, monetary policy could have containing effects. Low employment, the Fed though has leaned on that low unemployment so hard. Near maximum employment, near what they consider, premium for employment. It's like 4.2%. Those numbers are going to change. Cautious stance projections and views, highlight tariff driven, and every section has something about tariffs. Tariffs were clearly on their mind at this last meeting. That is the biggest takeaway. There we go. The biggest takeaway is we have data now that will change what we're reading. And now will change what we're reading. And that they were clearly considering and factoring in inflation via tariff, not just literal, but perceived, like sentiment inflation expectations, because those in reality are the same as literal inflation. If we think things are inflating, they're going to inflate. They're lying. They will cut like this. They will cut this like in past. What do you mean they're lying? So this was before the jobs data. They're almost certainly going to cut in September. We've been saying that for months anyway. We've been saying that forever anyway. But now they are going to have numbers, I think, that will like warrant it. I think they didn't consider it at the last meeting. I think they will now. I think we have a very, very high % chance of the cuts in September, which is what we've been saying all year. Isn't that crazy? It's wild. So the real question is, are interest rate cuts good for us? That's the real question, guys. Most people, I feel like, who are yelling about rates at this point don't even really know why they're yelling about rates. I think they are like, it's going to pump my bags, but is it going to pump our bags? Is it really going to be good? Historical rate. I can just pull this up like this. So here's the thing. Here's the jam. We don't typically get these. Why is this? We don't typically get these historical interest rate. Is this it? Just on normal market, like normal market time. Like in 2020, we had a bunch of cuts, and that was because of COVID, right? It's like during a black swan, during a big event that is unexpected. Is this it? Okay, cool. This should be it. We don't really get them in normal circumstances that often. So let's see. When did we cut rates before? Let's go back. Let's look at the S&P. Black swan. Yeah. Rate cuts are typically something that have been done like as an emergency scenario kind of thing, like to help markets when they need help. That cannot be said about right now, in my opinion. I don't think you can say that markets need help right now. They're at all-time highs, right? We got a cut here. September. Is this wrong? Why is this saying like 1, 2, 3? What's wrong? Doesn't matter. Timing's still going to be about right. What do you see? So this can be, you can interpret this in like multiple ways. I think the logical one is we tend to cut when things maybe aren't good. When things are bad. See, we see these fallouts afterwards. See these crashes afterwards. Or you can say that we cut and then we went to all-time highs. And that was true in both of these scenarios. Now, we have to go back to even get other ones. When do we begin cutting? We began cutting here. 2007, boom. We hit a low. That's not crazy. Hit an all-time high and then just crashed. So, I don't know. Is this what we want? Is this consensus? Is this what we want? 2001. I guess we want to look at when we began cutting and then like when we stopped cutting and then when we began hikes again, right? But because we do these based on how the market is performing, it's like causation, right? Is it causation or correlation or, you know, which is chicken and egg? Which is which? Do they go back up because we've stopped? Start raising rates. It almost seems like once we start raising rates is when the markets go up. But at the same time, we're raising rates because the markets are strong. Because the markets can handle it. This is interesting. This is definitely not my expertise, or it's something that I've spent tons and tons and tons of time looking at. But it's interesting because when markets are strong, we can look to increase interest rates. And then when markets are weak, we look to decrease them. So when we decrease them and then the market goes down, is that because we decrease them? Or is that because the markets were weak and so we did decrease them? So what is it that we want? Do we want interest rates up or down? I know we want interest rates down because we want mortgages. You know, I want a mortgage. Millennials, we want to buy a house. But that doesn't necessarily guarantee that mortgage rates will go down. Like a 30-year timeline, cutting rates in September isn't going to like change the mortgage market instantly. There's a lot to think about. The only thing I would encourage you to do is think for yourself. Think for yourself. Use your own logic here. I don't know the answer. I do know that when we decrease the interest rates, we are going to, in fact, like in indo facto, increase inflation. Increase printing, though not actually printing. Printing, that's already done by Congress, has already assured the printing. When rates will cut, we will see inflation heat. Inflation, though, is a scary word. It is. Inflation is never going to stop. It's a scary word, but inflation really is just the price of assets goes up. That's what inflation is. And goods and services. So more inflation equals number go up for Bitcoin, number go up for stocks. But it is a lie, right? It's going up, but it's not actually gaining in value. It's just reflecting a weaker currency. I don't know. Inflation is a hidden tax? Absolutely. Inflation will never go away, though. When we talk about inflation going to 2%, inflation I don't think will ever really be at 2%. They can have metrics that will say it, and that will make them happy. But I don't think it'll ever actually be at 2%. It'll always be higher than that. We've begun to inflate. We've been inflating. There is no going back. When we talk about that 2%, what I was saying is that's still inflation. That's still price going up. There's no scenario where prices go back down. There's no scenario where prices go to normal, right? Where they go back to what you remember them being. That's not a scenario. The scenario is just that they're going to increase slower over time. Damn, that looks ugly. Bitcoin, go back up. What's up, boys? What's up, Doug E. Fresh? Haseen, subscribed. What's up, Thobella? OJ, wow, a lot of new subscribers. Where's everybody coming from today? What's up, RV? David Rodriguez, Nid Hint, Deanna. I already got that one. I guess you guys are enjoying me kind of stumble over what I'm just like thinking out loud here, you know? I'm not someone who's trying to tell you that I am right about everything and I know everything. I'm just navigating through. What's good, Ion? What's up, FUD Expert? What's up, Joe? South Africa, greetings. Afghanistan, your dad's sack, good place to be from. What's the outcome from Powell? It was super nothing today. Super nothing. The key takeaways is that if nothing had changed since the last meeting in July, they almost certainly wouldn't be looking to cut rates in September. Key focuses were looking at near-term inflation, not as worried about the long-term inflation, and very concerned about monetary policy, trade deals, tariffs, etc. That was the takeaways. The problem is that wages don't go up with inflation. No, they don't. Oh, I'm not arguing that inflation is good, my friends. I'm not arguing it. I am just arguing that it will not go away. We have unearthed, or we've opened Pandora's box long ago, and we are making no attempts really to put it back. The Fed can do whatever it wants with interest rates all day. The U.S. is just going to keep spending more and more and more. And the government's just going to keep spending more and more and more. And we're going to keep printing money to do that. It's never going to go away. There's really not a scenario where that even kind of goes down. The only thing I think that can be done is to try to get inflation, like the Fed says they're doing, back to 2%, and just to keep it there. And 2% is kind of arbitrary. I heard once that 2% is like supposed to reflect gold. Gold inflates at 2% a year or something. I think it was just, is it Janet Yellen? Was it Yellen who came up with the 2% target? Like, this is not something set in stone from 1,000 years ago, this 2% thing. And I think the only logic I've ever heard is that like gold is 2%. I don't know. Maybe you guys know more than me. Maybe someone knows out there. 2% of gold supply every year. That's what they say, but I don't know. Is that really true? 2% excluding food and energy, which is wild, right, Stone? Don't you think that's insane? Yeah, we're looking at 2% excluding maybe the two things that are the most volatile, food and energy, and also the two things you have to fucking use. You have to eat and you have to power your shit. And without those things, you're doing nothing. But we'll exclude those, right? We'll keep those out. Okay. What does that mean? That means we can just pack all of the inflation into food and energy and then be like, pat ourselves on the back and say we defeated inflation. We did it, fam. It reminds me like when Reddit caught the Boston Marathon guy and like wasn't the right guy, but everybody on Reddit was celebrating. We did it, Reddit. And no, you didn't. You didn't get it. ETH price prediction. ETH prices for 44.50. Looking for 44.50 on the Ethereums. Looking for that this week. It's all floofers. It's all floofers. The weather changed. My skin and hair are all weird. For more, because this was a little nothing burgerish, but for more and definitely more relevant updates on the Fed interest rates, Friday, 10 a.m., Chairman Powell speaks at Jackson's Hole. That's going to be big. It's going to be important. I've already scheduled it on this channel. Put it on your calendars. Don't miss it. I'm waking up early for you guys. There's definitely going to be more clarity given there. It's arbitrary, kind of, yeah. CPI will be seeing in a few months as PPI front runs CPI, CPI, PPI, TPI, CPE. Congress has the power to create one coin worth the entire amount of the U.S. debt and pay it off. Wasn't that in The Simpsons, Steve? Here's the thing is, yeah, that and Steve, if you think about it, that's kind of what they do anyway. Even though they didn't do it that brazenly. Like, Congress is just going to print trillions and trillions of dollars to fund these different things, and where does that money go? I don't know. A lot of it probably goes in their own pockets somehow, but like printing that money de facto is like paying the debt. You don't have to print a coin to pay the debt that way. The problem with doing that is if you were to do that, yeah, you solve the debt, but the debt isn't really the problem. The debt isn't like the government owes China. It's like the US government owes China this money or something. The debt is we all own the debt. We all own it. Through retirement funds, through different things, we all own pieces of this debt. And if we are all just repaid on it, cool. But what have you done? You have now poofed 30 trillion, whatever it is, into existence. And you have effectively, how many X'd the money supply? You've just poofed all this money at once. You've created inflation in a insane, like in a way that will absolutely destroy any value of the dollar. And also, no one will then go forward and buy. They won't. Why would you buy the dollar if the dollar is just going to buy its debt out like that? You got to be way sneakier. You can't just poof it in. You poof it in, everything falls apart. Everyone says, why would we ever hold our money in dollars? Just going to poof trillions anytime they need to. That's actually what Germany did after World War II. When the whole world sanctioned them, fined them for all of the, bad stuff in World War II, they just poofed that money. And they said, well, F you guys. But at that point, they didn't care if people wanted their dollar, right? That wasn't the concern. They also weren't the global reserve wasn't as important. That they did that though after World War II. Interesting fun facts. Buy XRP, says Lizard King. Bitcoin Dome of Death chart. What's Dome of Death? Dome of Death. The dome. Aerodome. Where's the dome? What is Dome of Death? That sounds spooky. No, I have not. What is the Dome of Death? Two big paws, some more FUD. A nice fuddy-duddy. BTC Dome of Death. I'll just Google it. See a video from a year ago. I don't see it. I see it nowhere. Let's say it. Twitter. I don't see it. Where is this thing? The Dome of Death. Sounds so fuddy. I Googled it for Bitcoin. I literally did. I'm not finding it. I'm not finding it. I did Google it. Do you know who, like the account? If you can find like an account that said it, that'd make it easy. Sonic. Bullish for cryptos. Pooh Man. Where is Powell gear? We'll see him on Friday, 10 a.m. Yeah, I can't find it. I heard it. You heard it. It was 2 years. Quadruple 120 billion a month. 2 years. I'm looking for this Dome of Death. Germany sold all their Bitcoin for 50K. You know what? I think that means that Bitcoin will never trade to 50K again. I said it when they sold it, and I've said it since then. Anytime a government sells a big portion of Bitcoin, I don't think Bitcoin will ever go back to that price. Just like the US government sold early 2023, 19.5 never went back. Never. The Bitcoin Dome of Death refers to a market phenomenon where Bitcoin's price experiences significant declines after reaching certain resistance levels. Okay, I mean, I have a feeling you copy pasted that stress from somewhere, but like, what does that mean? Like, you know what I mean? I know it's not your saying. Who's the author of this idea? Because what would that mean, right? So like the dome of death, has the dome of death been every single bull market high? Like, was this the dome of death and that the dome of death and all the other highs before this? Like, you know, like that's doesn't make any sense to me. Fed decision in September is correct. No look at chart. No look at chart. Dome of death. Google. Dude, I swear. You know what I didn't do? I didn't Google image search. I did Google search for it. But I didn't do image search. Let me see if that'll do. Is it this you're looking at? This just looks like the next gen of FUD. Is this what you're looking at? This is just low quality. This is just low quality clickbait. I can already say it. I can already see it. I don't even like, this is just low quality. So what is this, right? It's just someone taking like the all-time high now, calling the top, and then saying it will never go back up. This has been said every single peak I've ever seen Bitcoin. Every single time. In 2017, after the top was in and price went down and CME began trading futures, there were articles everywhere about CME trader, whatever people saying Bitcoin will never trade above 10K again. I mean, it's not even bogus. It's just like, this is just Twitter clickbait. This is just like your classic Twitter clickbait. What is there to this? The cited evidence here is declining RSI. Okay, declining RSI. This is not good. It's not like a good thing. But you're just going to say now Bitcoin will never go up again because of that. Yet, look, by your own thing, by your own chart, this has happened over and over and over again, and your highs kept going up, right? So now you're just deciding that this time, like this dude could have put that at 2021, and guess what? He probably would have been right until when? Until last year. This is just low quality. This is the kind of tweet that like will get millions of impressions on Twitter, but just is just like doesn't have anything behind it. Could this happen? Sure. Could this happen? Could this be the outcome of Bitcoin? You could never say no, you know, something could never happen. But what we have to say is, okay, why would we say this? What is the reasoning? What, you know, like, why are we going to create this really grand prediction of over, you know, this is like a decade until 2037? Why? Just because declining RSI? Okay. You know, like, what a goofy, this is just like what works on Twitter. That is what it is. It's some good FUD. Some solid FUD. The chart, you know, people see it and they get spooked. Do you guys remember the death spiral? You guys remember the death spiral? You know what? I have an idea. I wonder who this guy that posted it. I wonder what other wonderful calls he's had. But do you guys remember the death spiral? That was talked about a lot in like 2018, where Bitcoin's price would go down to a point where mining would become unprofitable, so then miners would quit, but the difficulty of the mining block would be so high that nobody would ever solve another block again because it'd be too expensive, and that would create this like spiraling effect of Bitcoin going down forever. People were talking about that in 2018, and it was a reason that they said Bitcoin's price was going to go to like $100. Whatever happened to that? That's just like another kind of example of that. It's something that's spooky. Death spiral. Like, it had a catchy name. It's spooky, but it's like, okay, well, what is this idea? What is the substance of this idea? And at the end of the day, the answer was always nothing. It was just FUD. It was just just gibberish. This guy does have a whole like a whole page on it. I'll read it, but I have a feeling it's not going, it kind of looks like it was AI written anyway. I have a feeling it's not going to provide any kind of answers. Also, I have a feeling if we go back on this guy's post history, we're going to find some other stuff that's maybe equally sensationally gibberishy. I can do that. I'll do that homework later. I just want my mortgage paid. Same. Yeah, I'm not going to read it right now because there's too much. I won't be able to like process it in real time. Yabba dabba do. In my humble opinion, there's nothing humble about me. Peter Schiff Doomer. It wasn't Peter Schiff though. That chart reminds me of Y2K. I will just, honestly, I have seen those kind of charts every single bull run. Every single bull run, there is some chart where it's like Bitcoin is just like, this is the last time. Like people were saying it back here. It's like, this is the last time Bitcoin will ever, it's never going to go back up again. Like they say it every cycle. Every cycle. You know what though? It's Twitter. I had this conversation with another influencer, someone who does really well on Twitter. I was talking to them and I said, I just don't get it. I can have a post that's like 1 million impressions and I barely get any following from it. It just doesn't grow. And we were talking and I was like, honestly, Twitter, it just seems like the trick is to just flat out lie, is to just make shit up constantly that is not true, but is like kind of flashy and catchy and scares people or triggers their euphoria, like kind of confirms their euphoria, and to just lie. And it is almost as if it being factually wrong, like it being misinformation, it gets promoted more than truth. Like Twitter that's like what Twitter does. It's like, oh, did you make something up that like, okay, we'll just share that to everybody. I don't know. It's weird. I have zero fear of naps for the future. Yeah, do not. I have zero fear of that big pause. I don't know what Bitcoin's chart will look like by 2035. I will admit that I thought the chart was going to look different. You asked me in 2017, 2018 to 2020, what I thought the chart would look like now. I wouldn't have thought this. I would have thought different. But I don't know. I have no fear that Bitcoin will do this. I have no fear of the Bitcoin death dome, that Bitcoin's all-time high will never happen again, because I've just heard it so many times. It's heard it over and over and over again. Anything for the clicks, anything for the views. True though, true. Make Napster great. Also, we're still all talking about Napster, so did it really fail? I don't know. In 2017, what did I think? I thought Bitcoin would be like at 1 million by now. I thought by 2024, 2025, it'd be at like 1 million. Rest in peace. R.I.P. R.I.P. Also was, much newer to investing and trading in crypto and probably operating a lot more on Hopium than I currently do. Still operate on the Hopium pretty heavy. I thought it'd be at 1 million. I certainly thought we would be at 100,000 back here. I thought we would be at 100,000 in 2021. Like for sure. Didn't happen. Bitcoin's not without risk, of course. Of course there's risk. Why the doom and gloom? I don't know. Who knows? Because really, why the doom and gloom? I'll tell you exactly why. Because we hit an all-time high and then we sold off again. And it just keeps happening. And the sentiment was never good. Now the sentiment's even more beat up, right? That's why. This has happened every time we have gone to highs and sold off. Like back here, July, we all got sad. Back here in May, we all got sad. Back here in January, we all got sad. It just keeps happening, and we really haven't gotten to experience the other side of that coin yet. This bull market has not been heavy on the euphoria. It's been very heavy on the pain, on the grind. Dome of Doom. Dome of Doom. Every time we start, yep, dude, every time we start flying, it stops. I've never seen this like this. Tops in. Bear market, says Andy BitCensus. Best FOMC streamer. Thank you, Andy. Andy, what do you think? What do you think? You really think that, or are you just trolling? Are you just tweeting on Twitter live in the chat? I mean, I don't know. How can you argue with the dome of death? Someone drew a line. I don't think Andy's being serious. Maybe he is, though. I don't know. You'd be shocked if Powell cuts? I think he'll cut. I've been saying all year I didn't think he would cut. I've been saying all year that I think they'll cut in September. And here we are. The next meeting is in September. Now the probability is up to like 99% by market estimators. It's all coming together exactly how it was always going to come together. It's weird how that happens, right? Bitcoin will hit between 150, 180 by the end of this run, Steve. I agree. I hope it goes higher. I hope it goes even more. Retail will not be back like previous years. Too many is burned. Bad taste for crypto. Raz, it's totally like a rational thing to say, but I've heard that again. It's almost like the dome of death. I've heard that every single cycle. They won't be back. They learned their lesson. Guess what, bro? I'm talking to everybody, not just you. Guess what, bro? Nobody learned any lessons. Nobody. None of those people learned a lesson. Everyone who FOMOs into markets at the top is doing it driven by emotions. It's by euphoria or by fear of missing out, whatever. They're just emotionally entering. There's no logic involved. Now to say, oh, they learned their lesson, they got burned, they won't be back. You're now saying people are too rational to do that behavior again. They're too rational to be controlled by their emotions. But that's exactly what happened before, and it's exactly what will happen again. It's exact, I promise you. Even a lot of the exact same people will do the exact same thing. When it comes to our emotions, we have so little control. That's why trading is hard, honestly. That's why trading is difficult. It's really, really hard to control your emotions. It's really hard to trust your trade, to trust your plan. You start seeing it go against you. Your emotions say, hey, you got to run. You're done. You're done. How are we not in alt season yet? Well, we are getting there. Dominance is moving down. I trade a lot, dude. I've traded so much I just don't give a shit about the outcomes anymore. That's why I've become a good trader, really. What's up, Ishan Aora? Welcome. Thanks for subscribing. Phoebe Jones, Rajesh, Imran, Lav, Adam, Arturo, Paw, Hinoko, Keith Claus, Big John, Cambo Vision. Wow, we had a lot. This is the first stream where we've gotten like a ton of new subscribers. Let's go. You don't trust yourself? Never mind trading. Trade like Spock, dude. I just honestly, I try to trade like a robot. I could be better at it. But the more robotic that my trades have become, the better they do. Problem is not selling. I know. That's emotions, bro. It's all it is. I love you, crypto brethren. We love you too, man. Do you think Bitcoin consolidates to sub 110 this week? Yeah, it could. It could. I'm on the betting side of it. Won't. 110. I mean, we hit one. Really, the question is, do we break 112 or not? Like the 110, man. It's like if we break 112, we can have some more downside. We're holding on to this resistance flip support. We're in the zone. We're just trading a range. This is pretty much exactly what we said last week. We're just trading this range now. 119.5, 114.2. I mean, we broke down below the range. I would not be surprised to see price rise back above 14.2. Hang out here. Hang out in the range. I do not like these the weekly closes though. That 19.5. If 19.5 comes again, which I believe it will. If you're looking for a hedge, I think that's the spot. If trading excites you, you're doing it wrong. Blair, Give yourself a pat on the back. That was solid. Yeah. If trading is exciting or fun or anything, honestly, if it's anything, if it has any emotion attached to it whatsoever, if it's stressful, if it's euphoric, you're doing it wrong. You're doing it badly. BNB was the best trade of the year. Definitely one of them. BNB, we've been yelling about BNB being a sleeper all year. Another one, Tron, one of the best trades. Go back to yearly open, 27. Actually, that's not even a high percent up. It's moved really slow. But what it hasn't done is really stopped anybody out. Could have opened on leverage and just held it. BNB, definitely a big one. What else we got? Render, I bet. OND, ICP. There have been a lot of bad trades this year. A lot of not so good ones. Really, the only good trades this year, and you can say BNB, but the really only good trades this year, even the last few years, has been Bitcoin. Just Bitcoin until April. April came around and you had Ethereum in April. You go back to last year, then you have XRP. XRP was the wild trade from November into December, January. You had like XRP, yep, the end of last year. Then Bitcoin again all this year. Then Ethereum, April. That's it. That's why this bull run feels like shit. That's why it feels like shit. Is because there's just been no trades. There's been nothing. Every time the market moves, it stops. It's like 1 step forward, 2 steps back. And then like 5 steps forward, and then 70 steps to the right. SPX has been awesome. Stocks have been pretty good. I mean, same thing as Ethereum, almost like April. Still holding most of my link. Yeah, I think all the link I have now has been bought at like $5. That's fair. If your brother-in-law asks about what crypto to buy, the top is in. If your brother-in-law asks if the top is in, the top is not in. Your brother-in-law has a hell of a lot of power over this market. Hell of a lot of power. SUI ran, it kind of ran, right? I'm not saying things didn't go up at all. I'm saying kind of where the good trades were. And we've had good trades in this channel. The SUI we slayed this. We literally sniped the bottom of 2 moves on SUI. We doubled. But to say SUI is going to be in the same kind of, I don't know, good trade status. Okay. Okay. So you can say SUI from August of last year into December of last year. Okay. I will give you that. I will give you that right there. August to this year. But into this year, not really. You know what I mean? This is mostly down. We caught some nice little pumps, some nice little bumps. But overall, like this was when that was an awesome trade. This is what we're looking for. This is what we're talking about. We're talking about bull market. It's like 1,000% gain. Pretty much unidirection, just up. Looking for the pumps. Come on, Total. Keep going. What's up, Chris S? We have a lot of new subscribers today. It's wild, actually. I think we had more subscribers during this live than maybe the FOMC last month. I don't know. David Light joining the numbers as well. If you're out there and you haven't subscribed, make sure to subscribe now. Enable your notifications. Join our Discord. Sign up with our partners in the video description below. But on Friday at 10 a.m., Powell is speaking at Jackson's Hole. Giggity. At Jackson's Hole. A big banker meeting. Very important every year. We cover it every year. But I think we have very good odds of hearing Powell say something important on Friday. I'm not just clickbaiting you here. You know, I will clickbait you, but I'm not clickbaiting you with this. This is genuine. We have a lot of big data revisions since the FOMC and the FOMC minutes. This will be the first time on Friday where Powell has been out publicly speaking since those data revisions. This is going to be big. He's absolutely going to comment on it. So tune in Friday, 10 a.m. Don't miss it. It's going to be big. And I'm going to have to wake up early just for that, just for you guys. Yeah. Don't say I never do anything for you. All right, it's 3 o'clock. We've been live for like 2 hours, fam. We covered the FOMC minutes. Not a lot going on, but as I said, Friday, 10 a.m. Mark your calendars. Be here. It's going to be spicy. Hella spicy. Sign up with BYDFI, our trading partner, our exchange partner. No KYC. You'll get big bonuses on your first deposit when you sign up. And by using my link, you will get into our VIP rooms in the Discord. Discord.gg/TomCrown. Jump in there. Join the fam. I will see you on Friday. I love each and every one of you. You're all important to me. 10 a.m. Friday. Mandatory.